Welcome to Before the Bell, your home for actionable pre-market content. Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, February 23rd. It's 7 o'clock as I'm starting the video. And don't forget to run that player at 1.5x. Taking a quick look at futures. They're bouncing around a lot, not doing a whole lot, between about up 0.5% to 0.75%. Seems like they're coming off a little bit right now. Oil's down 0.75%. Bitcoin's up 2.5%. Gold is off $10. Not a lot on macro today. Mortgage applications, and then we've got a 5-year bond auction at 1 o'clock. On earnings, we've got Lowe's, TJX, Petrobras, and Overstock as the names that stuck out to me before the bell. And then after hours, we've got Fubo. Booking Holdings will be a good one for the travel sector. eBay and Hertz. So what I want to do this morning is hit up our oscillators, look at the quantity of stocks over their 50-day. We're going to take a look at gold. And then I want to show you a couple interesting things on Home Depot and Lowe's after we go through our indexes and FATMAAN names. So starting here on the Nasdaq Oscillator, you can see we reached up and tagged our overbought level, and now we've come down to minus 27. Certainly heading lower, but not anywhere near the extremes. So no real signal there on the Nasdaq Oscillator. I'm not going to show you the New York. It's basically exactly the same, right down in this 30 minus 20 to minus 30 area. So right on the lower side of the range, but not predictive at this point. One of the things that's starting to concern me, because we do have index shorts on, and a lot of us have shorts in ARK and other names, names you may be doing on your own, is this Nasdaq percent over 50 DMA. We're down here at 20%, and as we've seen, you start getting down into these oversold type areas, and it's ripe for a kickback or snapback rally. So I want you guys to be really on your toes if you have piled in to a bunch of shorts, because if you go to the website this morning, you'll also see some other measures that I put up there. To bearish sentiment is very, or however you want to look at it, bullish sentiment is at the lows and bearish sentiment at the highs. And there's been a lot of articles been written the last few days talking about the explosion in put buying and hedging. And I've also got my extremometer put call ratio on there. Now that's not really showing extreme put buying. So I still think the path of least resistance is lower, but that doesn't mean there can't be a face ripping rally out of these conditions. So I want you to have your antenna up and certainly stay very, very defensive here. And we're in turbulent waters, no doubt about it, with the Fed regime shift to lower liquidity. So keep that in the back of your mind. Moving on to gold. Here's our GDX weekly. We've got a nice downtrend line and lateral resistance working right here in that 34.5 range. Now that I'm not going to say Ukraine is settled, but we had an event yesterday and the day before, that it's right now, it's all about whether it escalates or de-escalates. And so gold is off $10. Now we're going to really find out what gold is made of from the standpoint of, was it all just geopolitical, or are other forces at work with falling real yields, inflation, etc.? So I would have an alarm set right in here at 34.50, 35, wherever you feel you want to get involved, because I think if we get a breakout here, then we got a good chance to head up towards 39. Here's the gold chart with the big gap up the other day. Now, a lot of us had gotten long in here. We missed this, got involved here. We got the gap up. So now what I think you can do is stay long against the gap. And if the gap fails, then look to reset back down around 175 and then see if it goes from there. But just be aware of that gap. Moving on to SPY. We are still below the 200. We came down to test this area here about 427.50, and then we still have the low touch on January down here at 421. I think today you can use that 432.5 as your pivot, and I think that'll work fine. You can see here this test with this low still yet to be touched. So 432.5, then you've got a level up here towards 437, and don't forget we've got the 200 there at 438, and then that would be the line of demarcation for more or less bull bear kind of a setup. If price can reclaim that 200 EMA, that's definitely a check mark for the bulls. And here on SPY, if you're an active trader, I think this is the, well, of course you can draw out a chart on a 15-minute or whatever, but I think this shows really well this resistance line that, for instance, say today we came up and broke out of this downtrend line and broke back above, that might be a place to say to yourself, that's a technical event for the bulls. They brought it up and broke it out. But I would definitely say if price were to jump back above the 200 EMA, I would be definitely out of my shorts. And you could say even down here, if we had a breakout above the downtrend line, start at least, scaling out, and then the ball would be in the hands of the bulls to see how far they can take it, and then you can reload shorts up at a higher level against overhead resistance. So now on the Qs yesterday, you can see we did touch the January low. So that's a technical check mark as, accomplished, and the bulls were able to hold it there. So they have that going for them. And now as we emerge in what looks like a baby bounce here this morning, we'll see how high they can take it. Just keep in mind, Qs are in worse shape, much farther below the 200 EMA. We've got a nice downtrend line to shoot against for folks on the daily time frame, and I would stay short under the trend line. So, I mean, that's technical analysis 101 on the daily time frame. If you get a breakout, you need to cover if you're short, and then you can make a decision, you know, do I want to go long or do I want to just stay on the sidelines? So, and here we have the 2 hour. You can see the touch down here at the January lows, and then a little bounce into the close. I don't have a downtrend line marked here, but you could easily drop one in. I think an important level here this morning is 340. That was the kickback high. If they can get price above 340, then I would be looking at this 343 area where we topped out yesterday, and that was rejected. If the bulls are able to pop this 343.50 area, then they can go on towards 346. Notice that's where the big resistance is going to be with this large volume over price profile bar. IWM, leg down, back test, breakdown. Now we're here proceeding lower. I think your pivot this morning is 197.50, 198 area. You can see it pretty clearly here where we reached down in the afternoon to this 196 level. So you can use that as your pivot. If they rally it, you got 198, 200, and then 202 as overhead objective levels. And then on the 30-minute, I've got this nice downtrend line here to shoot against. If they were to pop price over 198, I think that brings 200 into play. And like I said, 202. And what was yesterday's high? Yeah, yesterday's high was this needle touch right at 200. So if they were to break that, if you had short ideas, I would take it off and then look to reset at higher levels. Now, when I'm giving you this guidance, I'm assuming that you are trading it short term. If you are a daily time frame trader or a weekly time frame trader, these little moves are nothing. You got to go back. Remember, we went to the weekly charts over the weekend. This is definitely in a bearish trend. I mean, high, lower high, lower low, lower high. Definitely in a bearish trend. So if you're looking out over time and you're short IWM, that's the place to be, in my opinion. There's nothing that leads me to believe that IWM is about to, rip to new highs. Not even anything close. All of these little kickbacks are oversold bounces, bearish flagging action, that type of thing. So don't think that you would need to cover, a long-term short, because that's just not the case. So before we get into FATMAAN names, if you're new to the channel, thank you so much for spending some time this morning. What I try to do each day is, before the bell, look at the condition of the market, look across the indexes and the FATMAAN names, because they are the market, and pick off selective names here and there for swing trading, and give you objective levels to shoot against. So if that interests you, please hit the subscribe button and the alarm bell, and then jump over to the show notes. There's a place where you can register for all my content with just your email address. That way you'll get trade advisories and market observations morning, noon, or night right to your email box, and you won't need to hunt for it. So, excuse me just for a second. I had a little trade on, didn't work, got stopped out. Okay, so register for the content, and then you'll get an invite to the trading room. We'd love to have you there. A lot of aspiring traders, good group of girls and guys. So, Facebook, as I mentioned over the weekend, I would be using 200 as your pivot. Obviously, oversold. It's due for a bounce, but if the market continues to slide, it could easily slide down into that 185, 180 area that we highlighted over the weekend. Apple dropped down yesterday from that 167 area that we talked about, that we were using as a pivot, and made an undercut of the gap right here at 163. I think today 163 will work great as a pivot. It either moves into the gap and fills it, or it holds and moves higher. We've got overhead resistance here at 165.5, then at 167, then at 168.50. So that's Apple. Tesla dropped down from our pivot yesterday, came down to 800, and then bounced back to 830. I would use 830 as your pivot. And don't forget that the 200 comes in at 861. If there's a rally this morning and you see price coming into 860 and it stalls, I think that's a very good high probability short right there against the 200 with a stop just above. I think that's going to be tough sledding. If it pops it, take your paper cut and decide if you want to get long or not at that point for a potential run back up to 880 and potentially 905. Having spent so much time here right above the 200 and then to lose it, you got to give a check mark to the bears on that one. And remember, the ARK-K Innovation Fund is the one in the ARK complex that has the most Tesla. So if the expensive options kind of not your wheelhouse on Tesla, you can look to ARK-K for a proxy on that. Microsoft, if you were an intraday trader, there were quite a number of opportunities yesterday to sell this 290 area. We had 2 or 3 reachbacks, and then it just fell away from that level. So today, I think your pivot point is 288, and your first resistance is 290. I think if it breaks 290 to the upside, I think it can get up to 293, possibly even come up here if there's a big rally. But as long as it stays below 288, and certainly if it loses 285, then it's coming down here to 282 and potentially all the way back to 276, where there was this touch back in January. And don't forget, all these charts are below their 40-week moving average. So regardless of any kind of, kickback bounce, they're still in a bearish posture. Amazon, I did not adjust these pivot arrows. I would use, these still apply. This 30, 40 area is going to be first resistance. If it breaks out, then to the top of the old gap. If it loses this area here at about 29.80, then it opens the door for more selling. Google, really not a lot of changes from yesterday. I would continue to use this pivot right here at 26.10, and then if 26.80 is 25.80, 26.10, and then if 25.80 first support fails, then I think you would come back into this 25.10 area. And overhead, we got 26.60 and 26.80, where there's a large volume over price bar that will most likely act as resistance. Netflix toggling here between 387.50 and call it 372. Kind of in no man's land right here. I think you're either looking for a break back above 387.50 for a long, or get long against 370 for a try, but otherwise downward trend. And if we break 370, then we're going to be down in the high 357.50 area. A lot of volatility in semis yesterday. We had reach ups towards 270, then they brought it back, then we're back here at the bottom of the prior gap. So I would just use, I think you can stay long semis against 262 and look for a move back up into the old gap and potentially back up here to 273. But below 262, you got to really be looking at the downside towards 256 and even 250. We had, want to move on to Home Depot. I can't remember the last time we talked about it, but given yesterday's sell-off, I wanted to take a look at it. Put in a double top back here in late December, early January, and it's been downhill ever since. You can see all the EMAs in a bearish stack. Here's the 50, here's the 20, here's the 8, all below each other. And now we've lost the 200 with the 8-day falling below the 200. And what you'll see in a downtrend, a persistent downtrend, is you'll get that classic full bear look where all of these faster moving averages will move below the 200, and then you know you got a real bear on your hands. So really wide range here that you can set up as a bracket trade. I really think if you're looking to trade it, you'll probably want to just toss that idea out. Why? Because you got a range from 335 down to 315. That's a $20 range. So what you could do is, if you see support come in here at this large volume over price bar, you can try a long against 315, if the market's bouncing, and see if you can get a move just back up to the gap. That would be your first objective resistance level, and then you can see if that gap would fill and then get up to the 200. On the downside, any kind of break below 315, I think you're going to find 295 relatively quickly. Now, what I really wanted to show you, well, notice also the RSI heading out of town, the PPO bearish regime. But what I wanted to show you, and I don't do it very often, is show you these relative performance charts that I look at when trying to figure out what's going on in a particular company. Number one, what is the company doing versus the market? So here we have Home Depot versus SPY. You can see that going back in time a year ago, generally speaking, it was outperforming SPY. But that changed right here on December 1st. Of course, you're not going to know that. That's all hindsight analysis. You see a peak right here, you think things are great. But as time proceeds and you get the second peak, that gives you a heads up that Home Depot is starting to underperform SPY. And you can see right here on the double top, you also had a similar look in that RSI was lower at the second peak than it was at the first, and PPO was lower at the second peak than the first. So there's your double top with bearish divergence. Now, going back to the relative performance charts, this is the industry group for home improvement versus SPY. What is the group doing versus SPY? And you can see that it also started declining. So if you were in some kind of an ETF like XHB, which is that home improvement housing ETF, if you went over to that individual chart, you would very much likely see the same type of thing. That early slide. The final panel is how is a particular stock working versus its peers. So here we have Home Depot versus the group, and you can see that it's underperforming as well. So if you're looking at your charts, I think that's a real good snapshot to see how a particular stock is working against the market, against the group, or against the group, and how is the group doing versus the market. So usually what you want to do is, of course, if you're going to be going long, you want to be long, number one, the group or groups that are outperforming SPY. Why? Because birds of a feather flock together. Groups move together. Steel stocks move together. Using that as an example. Then, what are the top performing stocks in the group? I like to buy strength. I like to buy the leaders. You'll have other people saying, well, I want to buy a laggard in the hopes that there's going to be a catch-up trade. I don't like that philosophy. I like buying leadership in the group. So if you go to the steel group, and I'm just talking off my head, I don't know which one it is, but, is U.S. Steel leading? Is Steel Dynamics leading? Is it the iron ore producers that are leading? So here you can make that analysis and then you can find the leadership in that particular group. So find your strongest stocks, find your strongest groups, buy leadership, and I think you'll do really, really well. Now I want to take one last look at Lowe's. It reports here this morning. You can see that it dropped down on Home Depot's news. So here this morning, we've got support coming in at 210, and then we've got a big value band here between 210 and 185. So we can watch that this morning, see how Lowe's does. I mean, I can only assume that it's going to look similar to Home Depot, but they may have put together a much better quarter. And then here are those relative performance measures here. This is Lowe's versus SPY. This is the industry group again versus SPY. But then this here is Lowe's versus the industry group. And see, here's where you get the real information. If you remember, we looked at Home Depot and all of these charts were going down. But in the case of Lowe's, it was still outperforming the group. So you had an element of leadership there. Certainly if you were gonna say, you know what, I want to be in home improvement. It's a trend. It's going to keep going. Which one is best to be long right now? And you can see from those relative performance graphs that Lowe's has been the better one of the two. Now, what it doesn't tell you is it going up or down? Because remember, relative graphs, you can have something going up versus another one, but both be going down. And that was the case in these two particular examples, because you can see here, Lowe's was going down, but not as fast as Home Depot. So that's where the disconnect lies. So it's taking the price chart and then looking at the relative performance charts to come to a conclusion about the group, the stocks, and one particular stock that you may want to be long or short. So let's wrap it up there. Quick recap. Sentiment is getting stretched to the downside. I don't see any emergency type situation, but I think we got to stay really defensive and really on our toes for any kind of, sharp kickback rally. And if you see that exceed, resistance levels, break through, I would not hesitate to just, get out of your shorts, reset and recalibrate at higher levels. I think we are going lower, but that doesn't mean we can't get a fast rally to, squeeze people out like us that happen to be sitting short in a number of names. So keep that in mind. Let's wrap it up there. Hope you enjoyed the video. Hope you got something good out of it. And if so, we'll talk to you next time.